Question 1. The National Food Security Act, NFSA, of 2013 is a landmark social welfare legislation. It aims to provide food security by A. Providing every citizen with a minimum income to purchase food. B. Subsidizing food grains to a specific percentage of the rural and urban population. C. Establishing a universal basic income scheme for all below the poverty line. D. Ensuring zero hunger by distributing free food to the entire population. Question 2. The central bank's monetary policy uses several tools. The statutory liquidity ratio, SLR, is a key tool that requires commercial banks to maintain a certain percentage of their deposits in which of the following forms? A. Cash only with the central bank. B. Liquid assets like cash, gold, and government securities. C. Cash and gold only. D. Government securities only. 3. A government's fiscal policy involves its expenditure and revenue. Which of the following is considered capital expenditure? A. Salaries and pensions of government employees. B. Interest payments on government loans. C. Grants given to states for non-developmental purposes. D. Investment in building new schools and hospitals. Question 4. The Poverty Gap Index is a measure of poverty. It is used to A. Measure the number of people below the poverty line. B. Measure the average income of the poor. C. Measure the average distance of the poor from the poverty line. D. Measure the percentage of people who are multidimensionally poor. Question 5. A fiscal stimulus is a key economic policy. It is primarily used to A. Curb inflation by increasing taxes and reducing government spending. B. Stimulate the economy during a recession by increasing government spending and cutting taxes. C. Reduce the government's fiscal deficit. D. Encourage private investment by providing tax incentives only. Question 6. The Competition Commission of India, CCI, is a regulatory body. Its primary objective is to A. Control and regulate the prices of essential goods and services. B. Prohibit anti-competitive practices and promote competition in the market. C. Regulate the stock market and protect the interests of investors. D. Monitor and control the foreign exchange market. Question 7. The balance of payments, BOP, of a country is a record of its economic transactions with the rest of the world. A BOP crisis is most likely to be triggered by A. A significant increase in the country's exports. B. A rapid and sustained decline in its foreign exchange reserves. C. An increase in foreign direct investment, FDI. D. A stable and managed exchange rate. Question 8. The Ayushman Bharat scheme is a major health initiative. It primarily provides A. Free health checkups for all citizens. B. Health insurance coverage of up to a specified amount per family per year for secondary and tertiary care hospitalization. C. A universal basic income for all citizens. D. Free education for all children up to the age of 14. Question 9. The term poverty trap in economics refers to a situation where A. A country's government is unable to borrow money from foreign institutions. B. A person or a family is unable to escape poverty due to the lack of access to capital, education, or health care. C. A company is unable to pay its debts and is forced into liquidation. D. A country's economy is stuck in a low-growth equilibrium. Question 10. The Securities and Exchange Board of India, SEBI, is a key financial regulator. Its primary role is to A. Regulate the country's banking system. B. Manage the government's debt. C. Protect the interests of investors and regulate the securities market. D. Control the country's foreign exchange market.